based on what we're seeing right now, and you could probably attest to the Jazz, we're seeing a lot of multiples come back, and we've been seeing that since actually late December. There are properties, like just anecdotal starting off, like there are properties in Bowmanville. I remember it was like December 18th. I was hanging out with one of my buddies who's a realtor. Put an offer on that property again, December 18th. Traditionally, you're not supposed to have multiples then. People are getting ready for the holidays. I think it was 25, 30 offers or something ridiculous. So people are almost trying to front run the Bank of Canada rate cuts, right? So there's a little bit of FOMO that's happening right now. But also keep in mind, we're also coming off from the lowest sales in Toronto the past 20 years. Like, and that's when rate environment was high. We know the rate environment's probably peaked, and it is gonna cut. It's just a matter of when or how aggressively. So I don't think this is any sort of like special call. I think most people would agree that prices are probably going to recover this year. We're already seeing multiples come back, and if rates do cut as expected, then I mean, people are going to jump in. I think the big caveat is that one, if inflation, so US data came out yesterday, if inflation remains elevated and it actually failed to meet expectations, right, both core and like overall inflation, bond yields have shot up a little bit yesterday and today. As a result of that, if we're seeing that rate cuts are going to be pushed out further, that may taper people's buying expectations. But I mean, you're letting in 1.2 million people into the country. Housing starts are at record lows. It's a formula for pretty much like it's a housing disaster in the sense that, I mean, there's going to be way more than demand than supply of housing. So whether it's going to be this year, next year, we're going to see prices recover and recover strong somewhere down the line soon.
Yeah, my only thing with this article that I'll add there is I think this is a lagged indicator already, right? Like I would, based on like what I've heard and seen just from talking to other people, it seems like the peak buying opportunity was October, November, maybe into early December. Rates were higher. It was extremely hard to qualify. There weren't multiple offers. You could get conditional offers accepted, walk away if you want, whatever after that, right? I'm always of the theory that by the time the news is talking about it, it's a little bit too late.
So I completely agree with you.
You get the best data from kind of like noise on the ground, right? We've both been making offers recently, and I've been getting outbid, and I know Austin's lost a couple.
And what areas is that in, guys?
Toronto.
Yeah. Got it. Okay. Because I know at some point, correct me if I'm wrong, you guys were like going out as far as like Sudbury and stuff like that.
I'm still doing that.
You're still doing that, Mario?
Yeah, last year we bought a property in Sudbury as well, and then but since that one we're looking for development plays. What I'm looking for now is different from what I was looking for a couple years ago, right? So when you're looking for development plays, the cost of construction is the same really wherever you build. If anything, in some of these further markets, it's a lot more expensive, right? So then you really want to buy in markets where the resale value is the highest as well. Toronto, Kitchener, London, Barrie, maybe, right? And then what's the easiest to manage? You might as well buy it in Toronto. The price
it's in your backyard.
Yeah, it's not that.
And you just have the steady flow of tenants coming here, right?
Yeah.
Like and we can talk about like why you're looking into areas like Sudbury and stuff like that as well, Austin. For me, I do, and again, something that some would disagree, is that the class of the tenant, in my opinion, generally speaking, for the last 30, 40 years, in terms of income and staying long term, has been Toronto. Right. I'm a big believer that it's just easier to maintain if it's in your backyard. Now, full transparency, I just closed on a property in Florida, which obviously is not in my backyard, but I just liked some of the numbers that I was seeing in Orlando. When you say development, like what are you looking for, and what are you doing there?
The 4+1 strategy, basically, right? So buy a single family house, make it into 4 units in the future, put a garden suite on it, exit to CMHC financing, right? The typical kind of like redevelopment play.
Yeah.
I always just look at like, where's the government mandate going? What are they trying to promote? And let's go with that.
Where's the big money going?
Not even that.
Like the infrastructure.
The big money is going there.
Yeah, right. Like sorry, when I say that, I mean like in terms of infrastructure as well. Like when I see 3 levels of government pumping in money into a city, they know something. Like they've done their research, and their research team is a lot bigger than mine. I also feel like I'm not that smart, and I don't wanna just guess. I'm just gonna follow that big money, and that's what I kind of meant by that.
Yeah. No, I mean, I think Mayu makes a really good point. Like these opportunities, I think Bill C-18 was 2022 or 20?
I think it came out or it was finalized like last year. Like
it was
really,
finalized last year. Yeah, I mean,
Yeah.
so it's still early opportunities to break into that one. I remember when we were chatting, Mayu's first investment property was a pre-construction in 2014 or something like that, because there was a gap between the
huge gap between the detached and the condo market, right? When you can buy a condo back in 2015 for 300 grand or a detached in like Ajax for like 700 grand.
Yeah.
North York versus Ajax. You're talking two different things. You might as well buy the condo. Made a lot of sense. Then in 2019, when I bought a detached at Vic Park and Ellesmere for 670, it was a 2-bedroom detached, like bungalow, small one. But they were selling condos that were 2 bedrooms for 550. Like, exactly. The detached is makes way more sense, right? So
the gap wasn't as large.
Yeah.
So that being said, I mean, you almost have to look forward into trends, right? So you were looking forward into like this gap has to either close or increase, whatever the case is, right? And so I agree heavily. We know a lot of people who are operating in that space successfully because you have a new financing product, MLI Select, right? And then you also have these new policies like C18 that are pushing for more affordable or the quicker housing build, you know? So you want to sort of follow the trends instead of go against. And I think the big thing that people worry about as well is like the tenancy laws, the rent control. When you do these strategies, you overcome that, right? Like there's no rent control on these sort of new builds and developments, right? Which is very, very important for a real estate investor
in Ontario specifically.
Exactly.
Right. Yeah.
And there's no tenant risk, right? So if we take it back over time, like it was always duplex conversions that people were doing pre 2020, and it worked really well. Take a single family home, make it into 2 units, so on and so on. From 2020 to like 2022-ish, 3-ish, it was buying the commercial apartments that were doing like really well. Like we were all doing the smaller stuff too. We did some of like the bigger like commercial as well.
When you say commercial apartments,
four plus
five or 4 and above.
Five.
Got it. Yep.
So that was working really well because cap rates were coming down as interest rate came down as well, right? So even if you did nothing in theory on these commercial apartments, you would just be able to refinance them and pull out a lot more capital just because cap rates came down. So for anyone that doesn't know, like these apartment buildings are valued based on a multiple essentially of net income, right? And that multiple was getting, I guess, bigger and bigger and bigger, right? So that strategy worked well. And during that time, all we heard about in the news was real estate prices are astronomical, blah, 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 stuff like that, which is true. And it was. Now, all you hear about in the news is rent prices are crazy high, increasing every single month. So the result is these tenants know, you know, and nothing against the tenant community either, right? But
we love tenants.
But tenants know so much more that like if they were to leave, they would have to pay much higher, and therefore they're asking for crazy amounts of cash up front just to vacate a unit, which means buying an existing apartment building, your biggest risk is I have no idea how many of these tenants I'm going to be able to negotiate vacancies with. Yeah. And if I get 100% of them out, I'm going to make crazy money. If I get 10% out, I'm going to be kind of screwed, right?
If you get none out, which is likely, then you're just holding on to a...
You say it's not likely. Is that what you guys are seeing on the streets? Like a couple of podcasts ago, we were talking about the whole cash for keys. Right. And like to your point, Mayu, I mean, we had examples that we were bringing up that tenants were asking for like 25, 30, 40,000.
That's on the light end if that's in this.
For real? Are you seeing even
in
more?
Toronto, 25 is pretty reasonable in my opinion. Like in some of these outskirt cities like Sudbury, Windsor, it's not abnormal to pay 10 to 15K
up front.
Yeah, up front. And that's on the that's even on the lighter end as well, right? Like people know, for example, like these we're looking at a property. The tenants have been there for about 6 or 7 years, paying about $700 a month. If they were to go to rent the same thing today, it would be $1,800 a month. Right. And this is only 5, 6, 7 years ago. So the gap has increased so drastically. Even if you were to pay them 10 grand, they're not stupid. Right. Between moving costs first and last, there's not much left over for them. Right. And that, I think to Mayu's point, the risk is elevated in that asset class. And fair to them, if I was a tenant, I would not, if I'm paying $700, I'd never move out. Right. Yeah. So that sort of balances the risk scale where development almost makes a little bit more sense. It's obviously more capital intensive as well. But at least with the pro forma, you can more accurately predict what the end is going to be versus with the apartment.
If you're buying an apartment building, assuming you're going to get 30% out, you have no idea what that's going to cost you. Yeah. With development, it's just numbers. Right. Like plug in the numbers, you can get as detailed as you want, and you can kind of figure out does this work, does it not, right?
So are you looking into like assemblies and stuff like that? Like, are you going that far?
Those are
okay. Those
too,
are bigger,
too high budget for me.
Right now, like now, kind of thing. I get that. Okay. If you found that video valuable and you want to watch the full discussion, click here for my podcast. If you want to watch more videos, click here.